Hey guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today with another TA Tuesday. And what a crazy technical analysis week it's been. But first, remember, none of this is tax, legal, financial, investment advice. This is your buddy, G Dinero, helping you to understand what you're reading in the tea leaves or in the charts. All right. So with no further ado, let's jump right in. All right, so far, what a week it's been. And I'm going to start off with a different chart than I usually do. I'm going to start off with the Bitcoin CME futures chart. There's been a lot of talk about that around the internet the last few days. And what they've been talking about is this gap that you see here. There was a gap up from Friday, November the 8th to Monday, November the 11th. Remember, Bitcoin trades through the weekend, but the futures market is only open Monday through Friday. So that means that when Bitcoin traded up significantly over the weekend on the, what would that have been, the 9th and the 10th, Saturday the 9th and Sunday the 10th of November, it caused the CME futures to gap up or to open higher than where it closed on Friday. And that gap had remained all the way until we partially closed it at the end of February on Friday, February 28th. You'll notice that that wick almost came all the way down and closed the gap. And then over the last 2 days, Monday and Tuesday, the last couple of days, we have officially closed that gap. You'll note that we traded all the way down and wicked down to the 200-day moving average of the CME futures, closing and trading straight through this gap. What that gap means is there were no shares, there were no futures traded in that particular, contracts traded in that particular range until just recently. It gapped right through it, right up above it back in November. And now we've traded back through it. That gap being filled, that's a solid thing. That's good news. Hopefully, and I know hope's not a strategy, hopefully that means we're on our way back up again. Next thing I'm going to do is, this is a Bitcoin daily chart just to show you where the pockets of volume are with Bitcoin itself. So this is Bitcoin on Coinbase on a daily chart. And you'll notice a small pocket of volume right here in this $75,000, $76,000 range. You'll notice that there was not much volume traded from about 85, 86,000 all the way down to 75, 77,000, somewhere in that range. So let's say from 77 to 86, there was very little volume traded until just the last few days where we have started to fill that volume in there. Actually, the last couple of weeks that we've filled that volume in there. So that's what I wanted you to see with this is the VRVP, that's Visible Range Volume Profile tool. You'll note that there is a boatload of volume all the way down here at 67,000. So 67,000 is where the point of control is. And you'll note that the volume tapers off all the way up to the 61.8 fib level, which is sitting here at around 73.5, almost $74,000. That would be the floor, so to speak, right now, would be right there in the current market that we're in. Looking at the 4-hour chart, what you'll notice, we've broken out of that, into the bottom of the longer range linear regression channel. It's this small, faint green line. That's the midline of the linear regression channel. You can see the bottom of it is right here. The red line, top red line is here. So that's the long-term channel we've been in since the end of 2022 when Bitcoin bottomed out. We are in the bottom half, almost going down and wicking down to the very bottom and touching the red line at the bottom of that longer term linear regression channel. The short term linear regression channel, we've already wicked out of the bottom of it a few times. That's been going on since January the 19th, 20th timeframe. We also broke below the 200-day moving average. While we've used it as support twice before, once here at the end of February and once in the around the 4th of March, we were not able to hold it on Sunday, this most recent Sunday, the 9th, and we've since dropped below, although we are starting to see another buy signal here, and it's starting to look like a double bottom, what's called a double bottom on the chart, where you notice we came down, wicked up, came back down. Next plausible solution would be to go ahead and spike off of the volume that we see here. This strong support resistance line, that was support 91.5 for the longest time. Right now, that is a resistance on the way up. So what do I see for key resistance levels? The 200-day moving average, which is at about $83,500. Then we need to break above the 78.6 fib level, which is at 89.5. And then finally that $91,500 line. Once we get back above that, we should hopefully retest it, and then take off and go to the races. There are many that are saying that somewhere here near the end of March is when things should take off based on fractals of previous cycles, okay? Where are we in the confluence? We're near the bottom of the confluence cloud. We are mean reverted to the downside, more than one standard deviation right now. And RSI values had bottomed out recently, as well as the MACD. You do see the liquidity starting to click up just a little bit at the bottom of the chart. Moving on to the Solana chart. On Solana, same thing here. This is the VRVP shown on a daily chart. On the daily chart, we have broken below this longer term linear regression channel that we're in. We broke below it here. We are still in this shorter term linear regression channel, just going straight down like a rock right now. Although we are tending to find support at this 38.2 Fibonacci level, which coincidentally is where there is a pocket of volume also. That pocket of volume extends all the way down to 100. So right now, support starts where we currently are or where we currently were. We're up to 123 today, but where we dropped to yesterday, which was around that 115 to 117 level, that's where the volume starts, and it extends all the way down to the $90 level. Should see strong support at that level right there. Moving our way back up, we're going to have to churn through this volume at 150. So 150 will be that short-term significant resistance level. It's the 50% fib level, as well as there's a large block of volume starting at about 145 on the way back up. If we look at that on a 4-hour chart, what do we see? Again, you can see where we've tagged that 38.2 fib level just about perfectly, getting a nice bounce on it right here. We are still going straight down the midline of this short-term descending linear regression channel. The long-term linear regression channel, we lost that back on February 24th, regained it for a day here on the 2nd and 3rd of March, and have since used it, the bottom of that channel, as resistance. We have not broken back up into it. Support right now, like we said, 115 to 117 is the short-term support. 100 would be the next level down. Moving our way up, we have 145 to 150 because of the VRVP, the volume that we need to churn through, as well as the 50% fib level. Then we need to break back into the bottom of this channel, which is currently at around 158. That 61.8 is fib level is going to be significant resistance right here, because we're starting to see the 100-day, the 50-day, the 200-day moving average all converging on that 185 level. 185 to 200 is where that level is right now. 200 being the 100-day moving average, but the 100-day is moving down. Pretty soon, those all three are going to be just about in the same place. So what does that mean? That means that level will present significant resistance on the way back up as we are increasing in our on our way back up out of the lows that we've been in lately. This is the Tesla on a daily chart. Again, looking at VRVP, it's just something I wanted to do today to kind of look at the bigger picture. Here's the long-term channel that we're trading in. The bottom of that long-term channel is all the way down here at about 190 right now. You'll note the midline of the channel is at around 303, and we are in the bottom half of that channel. We've made our way all the way down to the point of control for basically the last year, which is right at 220. 220 is where there's a large block of volume. That's what's called the point of control. You can see there's a red line right there that I just circled. We are closing in on that October 23rd low from last year. That should act as support, this whole level. So anywhere from 212, let's call it 210 to 220 right now, should act as support. But again, with the sentiment right now being such that not very good for Tesla and Elon Musk, unfortunately, here in the US, that is lending to this sharp decline that we see in the stock price. Add in the fact that the deliveries should be a little bit lower in the first quarter of the year due to them retooling the plants so that the new Model Ys will be made on the lines that the old Model Ys were going to be made on. But they had to shut down the lines, retool them so that they're ready to go for the new Model Ys. Not an easy task. Next level of support down would be right around that 200 level. If we were to break down from this 210, 220 level that we're at currently, you will note that there is a large block of volume here at 250, which was acting as support for us until yesterday when we had that Bloody Monday where we dropped significantly. You can see even this large red candle here. If we move over to the 4-hour chart, you can see it a little bit more clearly. There's that 1023 low. We basically wicked down to there, and right now we're trying to find support higher than that October 23rd low. Resistance on the way back up, we're going to see it at 250 at this 38.2 Fibonacci level. We will see it at the midline of this descending channel that we've been in, as well as the 200-day moving average, which is currently right around 280, as well as at 295, which is the 50% Fibonacci level on the way back up. Yes, this circle over here might scare you a little bit, but what I noticed was if we continue down the midline of this channel, it intersects with this yellow line, which has been historically long-term support. If you go all the way back to March of 2020, which was when C19 was launched, you'll note that that low connected with the low on the December 22, January 23, when Elon was sleeping on the floor of Twitter. If you connect those two lows, we hit that low again in April of 2024, and it could happen again. If it were to happen again, the likely spot for that to happen would be on earnings. I'm not saying we're going that low, but that's around 175 by April the 29th. So if that were to happen, that to me, because I believe in the long-term vision of Tesla, that to me is a backup the Cybertruck and load up shares at that point. Again, not financial advice. That's just what I would do at that point, is to load up on Tesla shares, right? But that could happen. I noticed that everything is intersecting on one day, and that day happens to be earnings, and that's happened in the past, where on an earnings day, we've closed in on a target. And you'll note that I put a green circle back here. I put that circle in about 2 months prior to us hitting that spot. And I just saw the yellow line intersecting with earnings and saying, if we continue dropping, that's where we should find support and take off from there. Indeed, we did. And after April of 2022, we didn't have another great buying opportunity, with the exception of this one here in June. After that, we never had another great buying opportunity. Tesla just went on an absolute tear all the way up to 488 from a low there of around 135. All right, so that's Tesla. Last but not least, MicroStrategy. MicroStrategy on a daily chart, looking at VRVP, you'll notice big block of volume here at 250. You'll note that there are small blocks of volume at 230, at 216, down here in the 190 to 197, 198 range. You'll also note that we bounced perfectly on the 200-day moving average. We've bounced on it on the 28th of February, on the 4th of March, and again yesterday on Monday, the 10th of March. So these are where the pockets of volume are. Huge volume down here at 133, but I don't see us going down to that anytime soon. There is a giant pocket of volume up here at 340. So if you're thinking about selling covered calls, remember my video from a couple days ago, I talked about selling the 340 covered call. Now you see why. There is so much volume there at 340 that we will not just break straight through that level without finding some resistance on the way back up. If we switch it over to a 4-hour chart, looking at the 4-hour chart, there's the bounce. You'll see that yellow circle right there. I put that in with yesterday's video saying that to me was the great place to sell a put. Why sell a put on MicroStrategy there? Because if we're bouncing on the 200-day moving average and you sell the 235 put and you're able to collect, I think it was $30 a share, $3,000, and MicroStrategy turns around and takes off, well, then at that rate, that's a free $3,000 in your pocket. If you got put the shares, 235 minus $30 a share is 205. It's like you bought them at 205 anyway, which is several levels of support down. We would have to break through the 200-day moving average. We'd have to break through the 38.2% Fibonacci level in order to get all the way down to that 205 level. And remember from looking over at the VRVP chart, there were also several levels of support there as well. So 4-hour chart, we are mean reverted a bit to the downside. RSI is below 50. MACD is negative currently. We will find some resistance on the way back up here at 280. It's the midline of this descending short-term channel that we've been in for the last 3.5 months. It is also the 50% Fibonacci level. After that, the next level of resistance on the way up is now right around that 320, 325 level, which is where the 50 and the 100-day moving averages are converging. All right, I hope you have found value in today's video. A little longer than usual. If you did, make sure you like this video. Comment on the video. Tell me what you like best. Tell me what I could do better. Book a course with me so that you can learn technical analysis and TradingView inside and out the way that I've shown you, as well as options. I do an understanding options course. You could also book an individual appointment with me if you've already completed one of those courses or done an appointment with me in the past. And remember, guys, this is me helping you find increase your financial literacy so you can find that financial freedom for you and your family. Take care and have a wonderful afternoon.